It was a Tuesday morning, and Mark sat at his desk staring at the chart. The market was quiet, no signals, no volatility, nothing. His fingers twitched over the mouse. Maybe I could just take a quick scalp. But deep down, he knew there was no valid setup. This wasn't his plan, it was boredom talking. He remembered the early days of his trading career, when he used to jump into random trades just to feel in the game. Those moments had cost him thousands. Now he had promised himself, no setup, no trade. The hours passed. The market moved, but not in the way his strategy required. It was frustrating, like watching the train leave without him. Yet Mark stayed still, sipping coffee, keeping his discipline. When the right setup finally appeared 3 days later, he took it without hesitation. The trade ran perfectly, hitting his target in under an hour. As he looked at the profit, he realized the truth. Discipline wasn't a prison. It was the key that kept him free from emotional mistakes. Freedom, he thought, didn't come from doing whatever you wanted. It came from having the strength to do only what was right. The news broke like a thunderclap. A major central bank announcement was coming in an hour. The chat rooms lit up with excitement. Everyone seemed certain this would be the trade of the month. Mark had seen this movie before. The market would spike wildly, chew through stop losses, and leave most traders broke by lunch. He took a deep breath and opened his notebook. What can I control right now, he asked himself. He couldn't control the news. He couldn't control the market reaction, but he could control his position size, his risk, and his emotions. So while others were loading huge positions, Mark reduced his lot size to a fraction of normal. If the trade went against him, the loss would be tiny, just part of doing business. When the news hit, the market exploded in both directions, sweeping stops like a hurricane. His trade was caught, but thanks to his tiny risk, the loss was nothing more than a scratch. Many in the chat were raging, blaming the manipulated market. Mark, on the other hand, quietly closed his laptop and went for a walk. He had no power over the storm, but he could choose how to sail his ship. Mark was on fire. 5 trades in a row, all winners. His account balance had surged, and his confidence was overflowing. Maybe I've finally cracked the code, he thought. That night, he lay in bed imagining the headlines. Trader turns $100,000 into $10 million in a year. The next morning, he sat down at his desk feeling untouchable. He saw a setup forming. It wasn't perfect, but winners like me could make it work. Without hesitation, he doubled his usual risk. The trade went against him instantly. He told himself, it's just noise, and added more. By the end of the day, half of his week's gains had vanished. The victory high was gone, replaced with a sick feeling in his stomach. That evening, Mark reviewed his trades. He realized he hadn't followed his plan, he'd followed his ego. In bold red letters, he wrote in his trading journal, "The market humbles the arrogant. After a win, return to humility." The next day, he traded with smaller size, following his rules to the letter. It wasn't exciting, but it was steady, and steady was what built fortunes. The charts were quiet. For 3 days, Mark sat in front of his screens without taking a single trade. Every few minutes, his eyes drifted towards small moves in the market. Maybe I could catch this one for a quick profit, the little voice in his head whispered. But his strategy rules were clear, the setup wasn't complete. By the end of the 3rd day, frustration crept in. I'm wasting time, he thought. Other traders are making money right now. That night, he remembered one of the Stoic lessons taped above his monitor. Impatience is the tax you pay to the market. The next morning, the market finally aligned with his plan. The pattern was clean, the risk level precise, and the reward potential high. He entered the trade calmly. Over the next 2 days, the price moved exactly as anticipated. The trade closed for a massive gain, the kind that could wipe out a month's worth of small, impulsive losses. Mark leaned back in his chair, smiling. The days of waiting suddenly didn't feel wasted at all. He wrote in his journal, "The market rewards those who wait for the right moment, not those who chase every flicker of movement."